Hey there, everybody. Allison here. I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And in today's video, I want to talk about Adobe. Now, I do just want to give fair warning. I apologize if I sound a little stuffy or sick. I caught a cold from my daughter that I'm still trying to work through. So please bear with me as we go through this analysis. But let's dive into this. So Adobe's one that we've actually been watching in the profit recycling mastery for a while. It's been in consolidation. And during this consolidation, it was actually able to break back above its 100-period simple and turn it from resistance into support. On top of that, we saw a really strong squeeze starting to build up. We had a true low signal. We have bullish sentiment on the compound breakout tool, which is still valid for a bullish trend right now. And then we have momentum building up above the zero line with plenty of room to move higher. When we dive in to the chart up here, we can see that Bollinger Bands are finally starting to open to the upside. We have a nice stacked up formation. And so it finally looks like the squeeze is starting to fire. Now, you might be asking, well, Allison, it's already starting to go. Is it still a valid setup for me to jump into at this point? And I think it is for a few different reasons. One, the squeeze is still valid, right? So it is starting to go from a high compression squeeze into a low compression squeeze as it starts to take off, but the squeeze is still there. And when the squeeze fires, usually it can continue up to several bars after the move for that additional strength, in this case, to the upside. So we still have that working in our favor. There's also plenty of room left on momentum. When we zoom out, you can see it has a lot of room to go back up to the top of the axis before it may hit exhaustion levels. The third thing, which I think is very interesting for this chart, is we actually have two gap fills to the upside that are still valid. For those of you who don't know, basically when the price has a gap like this, whether it's a gap down or gap up, it's not uncommon for the price to move to try and fill that range. And the first one we're actually coming up on is 365.51. So that would kind of be the first target to the upside. But if this strength continues, if the squeeze is still valid and there's room on momentum, we actually have a second gap right here to fill at 389.28. So we have two different targets to potentially play for the squeeze move to the upside to see if it can't work its way higher. So all of this I like. And there are a few different ways you could consider playing this for your account. If you think that this stair-step move is going to continue the strength short term, meaning that it's going to follow through this week, you might go out to this week's expiration and consider a long call, right? Something that would benefit from these gaps trying to be filled to the upside and give you that nice profit potential if we follow through. Now, something like the 375 strike wouldn't technically go in the money if we get the fill at 365, right? But ideally it increases in value. We hopefully don't see too much theta decay work against us. But the second thing to note is if we do follow through with the 389 fill, then this will be nicely in the money to allow that to happen. And you might be asking yourself, well, Allison, this is roughly a 14-point move to the upside. Do you think that's even possible within a week? And I think so, because on Friday, we saw a 14-point daily range, right? $14.66 was the daily range. So if we continue the stair-step up action, like we have seen on squeezes happen in the past, then I very much think that going to our strike, let alone maybe even getting the fill of the second gap, is still very viable for Adobe to see happen. So that's one way you could trade it. If you want to be a little bit more conservative, you could go with a vertical spread at the money closer to the 365 level. So that way, if we barely follow through on the gap, it pushes the spread slightly and the money should still allow for some sort of profit. The other way to consider trading this, especially if you want to give yourself just a little bit of time on it, maybe go out an extra week, is to play something like a broken wing butterfly for the upside. So With that in mind, you could do something like the 370, 380, 385. This is a 10-5 broken wing butterfly. And the reason why I love these strategies so much in particular is because if you do move higher, but let's say it explodes and it goes straight to 400 before expiration next week, well, then you still have a profit potential on this if it goes completely in the money. So what do I mean by that? Well, if we pay $2 for the spread, just to keep math simple, then a pin at 380 would be an $8 profit potential. But because the debit spread is wider than the credit spread, if this goes completely in the money, it still allows for a $3 profit potential because $5 of this credit spread is taken over by $5 of the debit spread. We would have an additional $5 of the debit spread left over because it's a 10-point spread. That's what it would cash settle for, if you will, or settle out for if we are completely in the money at expiration time. And with a $2 cost basis, 5 minus 2 is 3, right? Still a $3 profit potential. A pretty great risk versus reward. This trade idea, of course, gives yourself a little bit more time, is more in line with the second gap fill, but still allows for a really nice risk versus reward. So bunch of different ways you could look to play Adobe. Certainly you could wait closer into the close to make sure that it holds up, or if it looks like it's starting to pull back, wait to see how support holds. And if it does, you can still look at some of these same trade ideas, maybe bring the strikes a little bit closer to the underlying price and potentially take advantage of this move to the upside. Thank you so much for joining me in this video. I hope you all have a great rest of your trading day and week. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.